If we drill down into the super prime sector, Rob's been doing some research in terms of the average monthly 10 million plus sales in London. So he's going to share some more details on that with us.
I think for all of you super prime listeners and watchers out there, the numbers in 2021 were phenomenal. Hey everyone, Happy New Year and welcome to the return, the excited super return of the weekly property market update with myself, Rob Cohen.
And myself, James Wild.
So happy to be back, so happy to be returning to the audience, to the industry, to the property sector, to finance. Myself and James sharing everything we're seeing out there in here at MJ Group and everything that's going on in the ground, on the streets and in the public. Can't wait for another year, James. I'm so excited. We're ramping things up this year, hopefully with even greater detail, more content, more activity, more knowledge, more shared information for everyone watching, listening and tuning in.
That's it, definitely, Rob, and it's been a busy start as we've entered 2022, but I think first we're just going to reflect on the end of December 2021, as it was a very positive end to the year, Rob, in terms of the transaction volumes which we saw, not only across London, but if we drill down into the super prime sector, Rob's been doing some research in terms of the average monthly 10 million plus sales in London. So he's going to share some more details on that with us.
I think for all of you super prime listeners and watchers out there, the numbers in 2021 were phenomenal. And to put that in context, in December alone we saw near on 20 transactions, which was virtually double the average for the rest of the year. And then when you put that in a 5-year context, going back to really, pre-Brexit times, you're talking near on doubling of the average weekly transaction taking place in that special market. I really do think that's a huge indicator across the world of where we are going into 2022 and what the pandemic and COVID has created in terms of volume and activity in the super prime world from Mr. and Mrs. ultra high net worth.
That's it, Rob, and we look at the positives of last year, and again, for the economy alone, it's a positive. Whilst interest rates have been at a record low for such a duration of time, having this international money in a lot of cases coming into the country, I think is definitely a positive factor for the economy. And the stable nature, the safe haven as London has been renowned as over the years, as its reputation is obviously. It's gone before itself again here, Rob, and it seems to be not only the place to invest in terms of Europe, but across the world. People from all corners of the world have been coming to the UK since the travel restrictions have opened up more, and I think that could be one of the factors in the December month being the busiest of the year in terms of the 10 million plus transactions.
I think also the important point of reviewing the December numbers and the context of what that month was is you're in the midst of this new variant and a new wave and very high levels of COVID. You've got people returning to home working at very high numbers. At the same time, the stamp duty holidays, windows, incentives had completely stopped. So when you compare the activity levels of transactions in December compared to the previous highs of 2021 of your end of March and your end of June's, that month as a standalone month, and from my perspective, taking everything into context of what I've just said, was without question the most interesting and what I would say is the best performing month, not in terms of overall transactions across the board, but within context of everything I've just said.
That's it, Rob. And when we reflect back on 2021, it was quite a stop-start year. We started the year with obviously a 3-month lockdown, whereby the government was encouraging everyone to proceed with their jobs. However, the furlough scheme was still in operation. And as we've dealt with Delta and Omicron variants throughout that period of 2021, the property market was resilient, Rob, and it did perform well and actually finished at its strongest point.
Those that know me and that worked with me over the last 3 to 4 decades will know that I'm a very positive person. What I love about the show and the data and the intel that James brings is that positivity is then supported and backed up by cold numbers and cold data. And if the markets that we work in can perform so well in such challenging conditions, whether it be pre-Brexit, post-Brexit, where we are now with the variants and the pandemic, when a market performs so well with so many challenges, it does give you that positive feeling of robustness and strength of performance. And the flip side of all of that, if you're going to be super glass half full, is imagine how well the market would perform if you didn't face such challenging conditions of Brexit and COVID.
Well, I'd agree with that, Rob. And just in terms of the market, 2021, like we see here on the data, it's one of the busiest we've got on record. And as we are at present, we've started the year in a very strong position in January 2022. I just wanted to ask your thoughts. I mean, last year we obviously had the sort of hurdles of lockdowns get over, but we did have the incentives of the stamp duty holidays, which did really drive buyers into the market. And it's just get your thoughts on what you think 2022 might hold. Are we going to continue this upward curve in terms of the transaction volumes and prices? It's unlikely we're going to have any lockdowns this year, but we're not going to have that stamp duty holiday like we did last year. And it's how you think the market will adapt to that.
Very clear early doors, speaking to all the agents out there, that the biggest challenge in 2022 is going to be supply. There's a real supply shortage and there's a huge demand. So based on what we've seen over the last 24 months, there's a huge demand, especially for residential stock. And for that demand to be fueled, there is a big requirement on more stock and more supply, and that's going to be the biggest test. So where you've got a shortage of supply and a huge demand, that puts pressure on pricing that has allowed pricing to go up in certain areas. And until that supply shortage is managed, I can see that trend continuing throughout 2022.
Yeah, thanks, Rob. And certainly the information that I have anecdotally so far this year, only a few weeks in, but the agents are saying there are buyers out there. It's just a slight shortage of stock in terms of properties which they're able to sell to get on their books. That's been the main struggle for the active London agents. And
at the same time, which is really interesting, is there is a shortage of rental stock as well in certain locations, because the thought of moving in the midst of home working and semi-lockdowns and the uncertainty around COVID and the pandemic has put many people in the thought process of, I'm just going to sit tight and wait to see what happens before I make that decision, whether to rent, to sell, to move, not to move, and so on. And that makes it even more challenging.
No, that's the data we're getting, Rob, definitely in terms of both the sales and the rentals, in terms of stock. Both lettings and sales agents are, they're going out there to try and lots of market appraisals, trying to get more instructions in the window. Again, looking back on 2021, Rob, in terms of the sort of the record numbers of sales, it's whether we think that might have a knock-on effect, actually, a positive effect on a lot of those people. They're likely to be doing, home improvements, extensions, various works there, and that could have a multiplier effect on the construction, a sector which itself has been performing very well, although there has been material shortages, which have caused significant price hikes, price rises, both in terms of domestic home extensions to, across a lot of the building sites and major house builders across the UK and London there.
I do think that's a critical point, James, that we're going to see in the first quarter, is the shortage of material and supplies, with inflation putting higher prices on those supplies. That double challenge of time, distribution, logistics and pricing with inflation has compounded both the large-scale development market and your homeowner extension renovation market. And it will be very interesting to see whether that continues in 2022. By the sounds of it, that we do expect that to continue in the first quarter, and we're just wondering if eventually that will ease off and there'll be less pressure, and the distribution channels will soften as the year moves.
It's almost a vicious circle between those two factors, with many properties which are turnkey, developer spec finished. They're highly sought after by buyers. There's sort of competing bids. Many houses, as we've seen, Rob, going to best and final offers, best and final bids, and that sort of shortage has actually created more of a premium and demand for those turnkey houses in terms of what we've seen on the ground and in the market.
Any other wider news for us? What's been happening?
Yeah, thanks, Rob. So we brought you sort of lots of news last year in terms of the rate war amongst mortgage lenders, and these have sort of paused somewhat for the moment. We had, I think it was the 16th of December last year, we had the small interest rate rise on the base rate, and that was brought in. Obviously, inflation figures were released, and days later that rise was implemented. So inflation now about 5.1%, and there are some analysts which are speculating this is going to further rise and hopefully plateau as we get to around 5.5%, 6%, and then we can hopefully get in the sort of downward trend on that rising inflation. Many of the lenders, they're sort of, in terms of the base rate rise, we're at 0.25%. Many of the rates have gone up sort of threefold of that increase, with some lenders possibly anticipating further rate rises this year. The sort of 2-year, 5-year fixed products have been the main ones affected there, Rob, with the tracker and variable rate mortgages. They're obviously reactive to the base rate, so they're not quite as affected with base rate movements. In terms of some retail news, another retailer, Wilko, is planning to shut 15 stores this year, just rationalising in terms of its high street exposure. The company has said that 11 of the 15 stores will seek alternative stores in a 5-mile radius there, which sort of softens the blow somewhat in terms of their presence on the high street. I think January, Rob, it's going to be a very tough month for pubs, restaurants in that food and beverage sector. December, certainly the second half, was an extremely tough month for them. Many Christmas parties getting cancelled. There weren't so many people catching up, socialising. People were very much keeping in within a bubble, just trying to avoid COVID. I mean, certainly here in London, the figures were staggering. So 1 in 10 at the real peak.
I've been speaking to a lot of traders over the last week, and they were relatively positive about performance in December, considering all the challenges faced. And what they have said is January has been very quiet in the first few weeks. To be expected, especially with the holiday season and home working. But in general, the mood is actually, I would say, more positive than I would have anticipated. And the timing of semi-lockdown, working from home, the holiday season, the rapid rise in the new variant has probably fitted in with the calendar to an extent, and hopefully, if the trends that we're hearing are that maybe the effects are diminishing, then, as is normal in January, as the end of January kicks in, retail, the high street, and hospitality, bars and restaurants return to a normal trend, which is expected in January in most years anyway. So let's hope that normal service returns and that January sees a relatively normal month, which is always the worst month of the year for those sectors in the high street.
That's it. And unfortunately, our seasonal festive party actually got cancelled before Christmas, as it just wasn't able to go ahead. It's something that we're looking to rebook in terms of as soon as possible. It's not going to be January in terms of the government's guidelines in terms of working from home, but we're hoping to schedule that in February and trying to do as much as we can to try and fuel that market.
Yeah, I would hope that everyone across the country, Europe, the world, has an opportunity to hopefully celebrate, rejoice in February or March, the return of the workplace and a more positive outlook on life in general. And I very much hope that we're reporting very soon that we have had our office and festive celebrations, and hopefully they're only a month or two, and in the end might be a year or two behind if you take it in context of the entire COVID situation. I very much hope that people are sharing in February or March their delayed festive celebrations. It has to happen. It's part of the calendar, and it will be a huge disappointment from my perspective if it didn't happen sooner rather than later.
That's it. And if we just sort of wind back the clock slightly in terms of analysing the high street and businesses which have premises on there. In 2019, prior to any of the pandemic, there was a lot of high street businesses that were struggling to survive in what were sort of normal market conditions. Businesses such as Mothercare, Bon Marche, Toys R Us just prior to that folded. And with the pandemic further condemning more of those struggling businesses which didn't have, good years in 2018, 2019, it's those companies without an online presence which have really struggled during the pandemic, and with businesses such as Amazon really thriving, but also at the same time those types of business taking people away from the high street and various retail parks. So I think that as we go in terms of barriers to entry from a economies of scale basis, they're larger than ever, with the overheads of physical retail premises being a real drain on a business's finances, whilst those without an effective e-commerce platform, they've been struggling to survive in terms of the pandemic. So new businesses have almost had to come up with a new business model, Rob, haven't they? Been able to sort of have that online platform presence in terms of marketing, and retail premises haven't been at the forefront of their sort of opening in terms of operation.
Absolutely. to wrap up our first show back, anything else you want to share?
Just in terms of news of sort of an acquisition of a trophy asset just the end of last year, 5 Broadgates sold over in the city for a figure of 1.25 billion. The office home to UBS, the private bank, with the building being acquired by Korea's National Pension Service. So more evidence of deals for trophy assets, as in the residential super prime sector. They are still taking place and happening. There's appetite for them from investors, institutional investors.
Brilliant. Thanks so much, James. So good to be back. As I said before, we really, really, really want to ramp things up this year. We really want to provide you, the listener, the watcher, the people on socials, everyone supporting us, as much market knowledge and intel and data that we can. We've really enjoyed providing the weekly update and the weekly show, and we just want to ramp it up in 2022 with as much relevant and up-to-date information and as much positivity as we can. We're really here to hopefully provide as much good news and share as much good intel that we see out there, and hopefully put people or send people off at the end of the week or the weekend, whenever they're listening, in a good way, and that not everything is doom and gloom, and that we can all have a more positive approach to business, life, and especially property and lending. So that's a wrap for this week, James. Great to have you back. Great to be with you again. Great to be back with the team. Great to have the audience, and really looking forward to engaging and supporting you all on your journeys in 2022. So welcome back. Thank you everyone for listening, watching, and engaging on the socials, and we will see you all next week.
Thanks very much, Raj. Thanks very much, everyone.
Take care. Thank you.
Bye-bye.